Everybody, welcome back to Covered Calls and Short Puts. My name is Mike Fairborn. It's great to be back with you today. And actually, I want to say good back with you teaching. It's not it's not back in this class, filling in for Cameron May. But today, folks, we will look at some of the short puts on some of the pullbacks that we've seen with the trends being up, some pullbacks as well as some breakouts over the range. We're going to be comparing implied volatility just to see what we're getting out there in the market relative to the premiums that are also out there as well. So, would like to welcome all of you, a little bit different group of folks that normally I'm not used to here, that normally sing in my classes. But hello to you, Janelle. Great to have you here, as well as Josh, Kevin. I do see Josh and others in my class, though. But welcome all. We've got Robert, many others in here. Wiley, folks. Any questions, comments you have, throw those in the chat box. I'm joining the chat by a good friend and colleague of mine, Barb Armstrong. It is great to have Barb on board, very knowledgeable, as you are well aware of. And folks, you can follow us both on X. Barb's handle is Barb Armstrong CS, and mine is Mike Fairborn CS. So with that, hey, let's do this. Let's just go ahead and get the show rolling right now with some disclosures to get started here. All right. So first off, options carry a high level of risk. They are not suitable for all investors. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Now, investing does involve risk, including the loss of principal. Short options, they can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. Paper money software application, which we'll be utilizing today, is for education purposes only. Now, a stop loss order will not guarantee an execution at or near the activation price. Once activated, they do compete with other incoming market orders. Also, as it states here, with a stop limit order, you may risk missing the market altogether. So, some things to be aware of there. Finally, here there are of risks of the REITs. REITs are similar to those associated with direct ownership of real estate. Finally, because we will look at a few of these, there are risks associated with investing in dividend paying stocks, including but not limited to the risk that stocks may reduce or stop paying dividends altogether. All right, look at our markets over here. You can see, hey, yeah, we might be in a position where we could continue to see a rally to the upside here. It will be interesting to see what we get. We can say this pretty much for certain, and I don't know if you guys utilize this. I think many of you might, but if you do look at some of the stocks, let's say within the S&P 500, this long-term consolidation range, didn't mean to zoom in that much. But if you come in here, you can really just use some of these tools to really help identify. Yeah, look at that. I mean, let's be honest, over this year and into some of last year, there has just been a lot of price activity in that range. I know for sure, yes, we had dipped a little bit outside of that range to the downside, but we're coming up into that territory where there just can be, and oftentimes tends to be, a lot of, shall we say, choppiness in this range in here. So, by the way, that's not such a bad thing if we were to stay in that range, if we are selling short puts, of course. Because if you're selling short puts, well, what does that mean? It can mean that it can also go sideways, and we can do oftentimes just as good with that short put as we otherwise would with, let's just say, with a um well, just by holding in a side range, even if it's going up, it could be very similar to a sideways move. We can still collect the max gain. And so it can be bullish to neutral in a lot of cases as we're looking at those short puts. So with that, I'm going to go ahead and take this off right now. Let's just remove that drawing and kind of highlight that we are creeping into that range. Now, does this extend to other stocks within other groups? Absolutely. In fact, there is the NDX right there, the NASDAQ 100. You can see I've just kind of put some lines up here towards that upper end of that channel. This is around 26,000, but yeah, we are approaching that range. And so, hey, could be choppiness, and that could be just fine with us, right? Down below too, what I did do is I put down here for us a little note, implied volatility. Now, this can be helpful on any chart. Because all else equal, when we are looking at higher implied volatilities, all else equal, we could just get a better bang for the buck. Now, this was a big dip, obviously, with that gap in the market going up, the VIX conversely gapped to the downside, that reduced, that implied volatility that we're seeing within the markets, basically across the board. And it can make it not as, let's see, you might not get as much premium, is what I'm trying to say, out of those trades for sure. You're just generally speaking, but we're still kind of in that range. I mean, we're very, very close to 20, as you can see right there. Not 30. Of course, we didn't spend a lot of time at 30, but it was outside of maybe the 24, 25, 26 level. We're down a little bit. That's okay. Even some of the more volatile companies out there, and there are a few, they are still well above this 20 number. And with that, like we said, all else equal, you can get more premium out of those trades. So what are we really looking at when we're talking about the markets? Well, we know that the market's going to be comprised of stocks going up, down, and sideways. But really on the short put, in many, many cases, we're trying to still get the general trend working in our favor, right? We like the probability of the trend because even if prices were to go sideways through here, and we are selling puts down through here, well, that could be a profitable venture for us, right? And so, yeah, that kind of a move, trend up, maybe range bound. Another key one there, I know many of you do look at, and that's this area too. Because a lot of these breakouts will go like this. They'll break out and then they'll break out and they'll come back down. But the breakout right there can be very interesting as well. Because again, what are our expectations for that stock going forward? Well, it's to the upside or at least sideways, maybe not as much of an expectation to the downside. So when I first learned about selling puts years ago, it kind of struck me as really, really kind of interesting because, you know, prices obviously they can go up, sideways, or down to a degree. We know they can be assigned at any time, but traders are generally looking at, hey, if I can hold above the short put price, I can go three directions here and still make the max gain. That always appealed to me because I think it's more difficult to project when prices are going to be doing this, going up. Because what do they have to do? They've got to go in one direction, folks, and that one direction is to the upside. Instead, we're saying that it has to go exactly in the opposite position, right, that we think it's going to go for it to work against us. In this case, if we're just going long, it's got to be directional into the upside where we think it's going to go. But if we have all these things working in our favor, maybe some price patterns, the trend, other indicators in our favor there. There could be other things to look at, volume as well as kind of another dimension of trading. But as we do all this, you know, we're saying that it has to go against every single thing that we're suggesting we think it can do. We expect it to do. And that is up, sideways, or down a little. In fact, it has to go maybe in this scenario down a lot or beyond our short put or very near it to work against us. So, you know, in terms of probability of success, you're having just generally speaking, just broadly, very broadly speaking, you have all these different additions, that you might be utilizing it. You think it's going to be going up or sideways. The market might be strong, whatever the case might be, all holding up against that short put level. So with that in mind, let's look at some of those companies that have been kind of moving a little bit here. Okay, so here is Cisco. Now you'll notice over here with Cisco, what are some of the first things you might see when you guys look at this? Now, I'd like to use a 1 year chart at least. Just as a reference point, right? A 1 year time frame. So that gives me sort of a reference to that trend. So I can see the trend extending over a period of time. And I can generally say, yeah, this is a higher high. We just made that, back in February. But since that time, we've kind of been trending up off the bottom. So maybe even some higher lows. And then even more recently, what did we get right there? Another higher high, and we're kind of pulling back again. Now this is Cisco, and you'll notice down here, I kept this reference point up, you guys. And all this is simply right off the bottom. This is an implied vol right there. And that's at 37. Now, what was our VIX at? VIX was about approximately 20, maybe a little bit less than 20. Well, we're getting close to double that on Cisco. So if we like what we see in terms of the probabilities, patterns, breakouts, trends, indicators, you name it, if it's going in our favor, that implied volatility, all else equal, can just be a positive, just by itself, right? I mean, it's just there's just more bang for the buck. But I have to say all else equal because yeah, there's prices could still go down as well. But let's do this right now. I want to take a look at this one in terms of let's look at a short put vertical on this. The time frame we want to be utilizing here, I'll just go back to it and point it out real quick. But normally, and this is in some of our coursework as well, 20 to 50 days. Now, can you go out further? Absolutely. Go out further in time. You can do that. You can go shorter as well. But for traders that are looking at it, they're trying to balance out, the premium they're getting with potential risk and the risk of holding it too long or whatever the case might be, that, too long of a contract term. And so it might fall within that range. Now we do have the May falling in there pretty nicely. Let me go ahead and just send all this down and we'll pull it up and take a look at it right now. Oh, right, sorry, we got it open right there. Delete. Okay, so we've got it pulled up right now, and I've got some of these the columns up top, and they can be quite helpful. Delta, again, remember, it measures a $1 price move. A $1 increase in the price of the stock will influence the amount of the spread by the amount of the delta. Like, so 21. So a dollar, if this goes up higher, then what's going to happen here? This is going to drop by 0.21. Now, it's also an expectation too that traders will use. So they're just saying a 21% expectation that would actually go below that 75. Traders will use about a 0.20 to a 0.4 oftentimes when they're selling. Again, trying to balance out risk with potential reward. Okay, so as we look at this, first thing I want to do is go over here and just say, well, okay, here's our 75. Why could that 75 make sense? Well, the delta, about a 21. We're kind of towards the lower end of the range. But then also, we might have in here, what did we just do? First of all, we just broke above a resistance level there. We're kind of close to it. We're actually a little bit below it, those previous highs. But still, we're kind of ticking up, right? We're still kind of moving up here. And is that not a support level there? What about over here? That's a support level as well, about 80-ish. So we might have that is a little bit of a buffer zone that traders would look at too. So I'm just going to want to get that through. I think many of you already understand this, but just wanted to give you a quick review. Now let's just dive on into the trades over here. What does that 75 look like right now? So there we go. The 75, again, on the put side bid, 110, pretty good spread. Getting upwards of 10 million shares traded already. This can obviously help to influence the spread here on the option. And by the way, let's go ahead and just throw out another option here. I'm going to do this. I'm going to add this one in. This is kind of new. The one I've got right now. Okay, these are just the delta columns. Let's do this. I'm going to take out the gamma and I'm going to add in open interest. Right. And the other one I really like to see on here too is the volume. Looks like a few of these have been reset on my computer here. That's fine. I'm going to go with save as. I'm just going to call it exactly what it is. So now anytime I come here, there it is up on top. I wouldn't mind deleting some of these, by the way. Yeah. Just delete them if you have them in there too. Okay, that's fine. Just as an example, you can delete those too. But now I've got the open interest, which is always good to take a look at too. It's just a good reference point. These are in the thousands, which is a positive, all else equal. You can see us over here. A lot of traders will look at least in the hundreds, but we've got some open interest as well. Here's our 75. If I just click on that 75 right now, and I click on the confirm, just confirm only, you can see that our max loss is a little bit higher because there is that expectation built in that, yeah, if it goes below the strike price by expiration, or we just get assigned, then we'd be owning shares. That's, I mean, incredibly common. How can I say it? It almost always goes that way. If you're going below the stock price by expiration, you're going to be assigned shares. Anyhow, there you go. So you have to park that in the back of your mind. You can see the buying power effect over here with that, but it's 109 right now as it stands. Now we could probably get a little bit out of this. Some traders will just say, you know what, get me like a 112, whatever the case might be. They could do that. Now, folks, why would it make sense for us to just sell a put? Why would somebody be selling a put as opposed to selling a short put vertical? There are some considerations to it. Sometimes they might be okay getting the higher premium, right? If they're just selling the put, because in the back of their mind, they want to be owners or potential owners of stock. They want to try to buy stock for a cheaper price at that 75 level. Because they're saying that's a lot better than where it's at right now. If I get assigned down here and I'm buying 100 shares of stock, standard equity option contract here, one contract, 100 shares of stock, that could be a positive. If I want to own this here, that could be a real positive. I get to own it. I get to own it at 75, but my total cost might be a little bit less because why? Well, let's just say I get 110 out of this option premium, right? That knocks it down to 73.90, $73.90 I'm buying it for, which is a lot better than here. This is 81. So if I want to buy it, I could do this. I get a higher premium, but excuse me, yeah, I get a higher premium than I would selling a short put vertical. But if I was just looking to maybe minimize that potential loss or potential or try to define that risk better than what we're seeing here, I think we could do better by just clicking on the 7250. Now, oh, let's see. 75, 7250. That's not right. Hang on. Something's wrong there. So click here and then here. It would have been nice to get that amount because I'd have hit the confirm and send real quick. But we are not getting that amount. We're getting a 41 cent, right? Because we're buying the 7250 to lock in that difference. So here's the thing. How much would we have to add to get up close to that? If we were wanting to get that same premium, let's keep adding. Oh, subtracting in this case. Yeah, taking those off. Well, you know, 3 times 4 is about 120, a little bit more with 3. Look at this. Not only is our buying power effect lower, so too is our max loss substantially. We're actually getting a higher premium here. We're defining our risk by doing that 123. So why don't we just go ahead and submit this one for now in just a second. Let's go ahead and put since we mentioned the stop orders in there, let's go ahead and put kind of a target. Well, we can do a target range. We can shoot for that 41 cent credit and try to close it earlier if we want. But look at this. What if I do this instead? I'm going to go down here. I'm going to click on first trigger sequence. Now I'm going to create an opposite order. In this case, this is one of the ways I'll do this too, like in the swing trade class on Tuesdays. We'll do a few of these, this approach. And we'll say this, if I'm going to make 41 cents, okay, I'm going to lock this in, by the way, so it doesn't keep floating on me. Or 40, okay, it just went to 42. Fine. We'll go to 42. I'll show you over here. But if we're going to get 42 cents, and let's just say we're right on it. We don't know if we're going to be right according to the Delta, but the Delta said, estimate, about 80% or so. I'm just saying, just as an example here, we have 80% accuracy. 20% of the time it will go against us if we're using those numbers. And when it goes against us, how much are we willing to lose on here? The max trade or maybe a 1-to-1. So 0.42, if we wanted to keep it tight, we just do a times 2 on this. So what, 84? 84 cents. This is one way to do it. So when you're losing on a 1-to-1. Because why? You don't want to take the max loss because your expectation is you're winning 80% of the time. So on this 20% losing rate, you want to be losing on a 1-to-1 basis. Okay. You don't want to have these big max losses hit you when you're wrong on the 20%. I'm just saying. Okay. No guarantees on the 20%. We're just using it as an example here. All right. Everybody good with me on that? You're just trying to create a sort of a plan, and the plans are so critical too. You want to make sure you have a plan that works, that makes sense. Make sure the numbers make sense. Do those numbers make sense to you? So that when you lose, it's not too big, and you got to kind of sort that all out together. Anyways, I'm going to go ahead and set this up right now, um, so we can get that down. But there you go. That's not 84, is it? Oh, number lock key. You got to watch the number lock key. That'll get you messed up. All right. So we're doing 3 though on the Cisco. Confirm and send right there. Okay. We'll see if that fills. I realized I did pump it up to 42, and we'll go from there. Okay. Let's go. Into our next one. Hey, I want to do an example. Let's just take a second to do a different example. Here we are looking at an upside move. What if somebody did just want to sell puts and try to collect um or try to buy a stock at a cheaper price, and one that's instead of going up is going down like this. Everybody see this stock? Nike. So if we go over here and look at, I mean, Nike's been down. Whew. Okay, I'm gonna do this for you guys. That's a 15-year. That's probably enough. But just for the heck of it, I'm gonna give you a max time frame because this is kind of nuts on this one, I think. It's just like, look what this guy's done over this time frame. Whoa! You mean to tell me that we're already back to 2014 levels? Way, way, way before COVID is a key marker over here. We're well below COVID levels. Now, what is interesting is a lot of, like, sports people do wear this attire. And was that famous golfer? I think his first name is Rory. He was decked out in Nike gear for sure. And I think he just won. I don't know if that'll have a direct impact, but there was a downgrade over here too, some downgrades. But wouldn't it be fascinating if this is and for some people, I'm just saying, we don't know. This is speculation. Like somebody, maybe this is their expectation. One of these gaps out here, folks, is called an exhaustion gap. I'm not going to spell it all out, but I'll just say exhaustion gap. And that means when it comes down here, that's the final gap. It basically, everybody who was going to sell just sells, not everybody, but a lot of people, and you get what's called capitulation. Okay. Where are we at on our implied volatility? Oh, we're still in the 36 range. Maybe there's some decent bang for the buck if we're willing to sell a put even lower and speculate on this. I mean, that's what some people might be looking at when they do. And I'm just showing you how you can sell a short put to maybe collect a nice premium if it stays up. And if it goes down, maybe you can get the stock at a decent price. The other thing, too, I wanted to mention, when you see the stock drop like it did, and we just looked at a max chart, and that was not pretty, but low prices can be good for stocks that do pay a dividend. If we're looking to buy the stock on a dividend, and we are, let's just say in this scenario, that's like 3%, almost 4% on Nike, 4% on Nike. I can't, it's been a while since we've seen that. Let's say our expectation is, because dividends can be cut at any time, but our expectation is Nike's going to be able to pull through and we're going to get a good rate. Now, if we buy it lower, what happens to that dividend yield? All else equal, if the dividend remains the same, and by the way, Nike's been raising the dividend, not cutting it, but we don't know what's going to happen in the future, but let's just say it just stays even, just flat. What happens to our dividend yield? See my line going up? That's my indication showing you guys that the dividend yield would, in fact, go up. So we could be at 4%. We can get closer to 4%. We don't know where it's going to be at. But if I were to sell down here below 40, or just say 40, all else equal, we're buying cheaper. Our dividend yield can go up too. So that's another interesting element you can get with these downward moves. Now, how many of you, I've got to find out. This is something I just want to know, but maybe you would find it all interesting as well. I'm going to put this down here. So I'm just going to put a little poll in here and would love to see your feedback in here. So when you sell a put, are you generally looking for premium only? to potentially buy the stock. I'll pass this information on to Cam as well because I think it's great to know, and we can just kind of set this up. Some of these, just get you guys classes or just topics that could be helpful as well. This is one that I used to do because I used to teach this class a long time ago. Let's just do this. Or I'll just say and or stock. There you have it. Okay, I just started the poll right there. So if you can, let's get 30 responses because that's the minimum size that you want to get normally when you're doing a sample size on a statistic number. So if we can get that, I'd love to know because and then we'll just go from there. It might be pretty close, but the reason is I just brought this up because some of you do like to look for these bottom type patterns. Some of you do like value too, because selling puts is clearly a portion of that. Let's look at the weekly. So what are we looking at over here? So if I even said 40 or even down through here, what do we got? Look at this. Here we go. Now we're going to take a look at it. So I'm just going to sell a put on this one, and the prices aren't so expensive either, so we can dive on into that too. So here's your 40s, but some people that say, you know what, I want to buy it, but maybe not 40s, maybe not the 40s, maybe not my number, maybe it's 37.50 or something like that. I'm going out 32 days. If I really, really, really wanted to buy it, and I knew I wanted to buy it, and I was good with the fundamentals, and I was willing to hold over some earnings announcements, which can also be very volatile too. Look over here with me. I go out further in time, 66 days. Now we're into the Junes, another month out. Oh, our delta has gone up a little bit. We're getting a little bit more out of it. And what do we have for that 37.50? Well, now you're getting into the 75 range too. $75. In other words, you could reduce that total cost by about 75 if we were to get it at 75 here. And we get assigned, etc. I'm just going through the whole process of it, right? So there you go. All right, let's go ahead and take a look at our poll, and then we're gonna roll through these things a little bit quicker. Oh, I think I have an idea. Okay, last call for the poll. All right now, five, four, three, two, one. Here we go. I think we're good. Let's see what we get on our numbers. Yeah. Okay. So it's still very close. It's very, very close within a 5% really margin, right? 55 to 45. Okay. So we'll do the rest of ours. We'll just do, premiums. I was going to look at it anyways, but I want to throw one out here because I want to throw one out and just see what it looks like. So let's just do this. So let's do the, um, I'm going to do the May and I'm going to do the 40. Okay. So 32 days left to expiration. So here we go. I'm not really going to put like an exit level in here because we're okay owning the stock and owning it lower. Okay. In this case. All right. So confirm and send. Confirm first. Let's just take a look and read our order right now so we can see it. Again, this accounts for Nike going to zero right there, right? If we own shares and the price of the stock goes to zero, I think a lot of participants probably don't think that's going to happen. But hey, we want to look at theoretical total, I mean, the potential losses there. Okay, so confirm and send. Voila, that's done. Next up, all right, we'll switch. Too long to wait. Okay, there you go. And by the way, I realize I'm using this, but you can do this too on other stocks that are higher priced, and you're just going to be capturing or trying to capture more premiums as well with that. So keep that in mind. Okay, next one. Oh, not this one. I'm sorry. Let's go to SNDK. So SNDK right there, SanDisk breakout trade. Now, a lot of times traders would say, gosh, that's really broken out too high. It's a little bit long in the tooth, so to speak. In fact, we've broken up so high here. We're above 900, but maybe my expectation is going to go to 1,000. It could shoot straight up to 1,000, or it could consolidate back down. But in either scenario, let's just draw those out. Upside 1,000, because a lot of times stocks are, if they're above 90, sometimes some traders will say they get sucked up to 100. If they're above 900, sometimes they'll say they get sucked up to 1,000. Whatever the case might be, an upward move or a consolidation, if those are the two expectations, some would just say, well, if I'm selling a put, okay, oh, shoot, you know what I didn't do? I'm sorry. I didn't hit the stop on there. My bad. All right. Let's quickly go in and correct that Nike since it's filling at that level. It immediately got out. I heard the double fill. Not Nike. It was our first one, which was Cisco. Good case in point. If you ever hear that, see that, folks? We have no positions on. Okay. So let's go through that again real fast. Okay, so there we go. Uh, I'll just choose 40 in this case. Okay. And just to get it under our belt, I'll show you what I did wrong here. We're going to go ahead. I put first trigger sequence. Let's go ahead and create an opposite order to get out. Let's go ahead and go over here. These are all locked now. Good tail cancel. We were looking at 3 contracts. Oh, sorry. On the plus side here, I've got to go over here and go to stop. Okay. Look okay now? Just about. We got to set our upper level on a 1-to-1. I got the fill and then it immediately dropped back down, but there you go. I had it, I think it's a limit or something. So anyways, there you go. Let's go ahead and click confirm and send, and we should be all set and ready to go now. Yeah. Okay. Now, there it is. Notice we held our position. Okay, and we have that exit up. So, back to SNDK. Now you say if you're selling a put here, yeah, that could be pricey. Let's just look for that the 40 or the, well, let's see where we were looking at down here, like well below this point, even down here. What does our 20 look like? Oh wow, we're down at 740. Oh, that's it down through here. It's a little ways down. I'm going to go down even a little bit further on this high price stock and just show you how some traders might do this as well. So, yeah, look at this. Wow. Okay, so yeah, we are, yeah, like I said, we're close to that 1,000 level. Spread's okay at that point. Maybe not great, but for the spread trade, let's take a look at it. I'm going to take this one down further though. That's 700. I'm going to go just below that 700. Here's a 680 and a 670. Okay, if I was just selling that 680, whoa. Okay, it's got a, I mean, up in the 900s, we've got a ways to go if this stock were to drop substantially, and that's a risk factor for sure. It doesn't have to drop to zero in order for us to have a larger loss because we are up so high, right? It's a fairly large credit, and we're going to get a much significantly reduced credit have if we go to the next level here. Let's just see what this one looks like, and then we'll look at our return on risk as well on this too. So here we go. We're going to buy this. So yeah, $2.40, but that puts us at 670. So our short leg would be somewhere down through here, right? Right through this level over this time frame. There is an earnings announcement, and look at that implied volatility. Wow, we're in the hundreds. Now, post earnings, sometimes that implied volatility can dip. Looks like it dipped all the way down to 1. But yeah, substantially higher over here. Look at that implied volatility. Getting more bang for the buck. So notice we're going lower on those probabilities and we're still getting a higher number. I'm going to do this. I'm going to actually, um, yeah, well, let's take a look at this one, first of all. So substantially less, what are we getting in terms of a return? Substantially less buying power effect for sure. And hang on a second, I got to get this up here. I wanted to show you guys where we're at. So what's our total max loss in this case where we're helping define that risk? 765. So let's do the 235 as a proportion of the 765. About a 30. I don't know how you guys feel about 30, 31. It's okay, but remember, we're also using an expectation here on that 680, right? I'll line it up, about a 15 delta. So a little bit more of a buffer zone, right, than those upper strikes for sure. I'm just going to put this one on so we get some more under our belt, but I just clicked it on right there. Okay, we'll see how that feels. It does have 13 million shares traded today, but I'm not getting a ton of open interest down here. More on the 650 for sure. Okay, let's go. Let's do one that's not so far out. I want to take a look at Netflix, which has broken a prior high. We do have earnings coming up. We have earnings coming up, and here is the possibility. We did break through 100. We'll see if we can hold up on that 100. Look at that. So you're at the 43 number right here. But if we were okay holding through earnings, and let's just take a look and see what's happened on the last couple of earnings, And now think in terms of our premium, what we could expect post earnings. So that was an earnings announcement that dropped quite a bit. Earnings, quite a bit. This could really help to reduce the premium here post earnings if we don't have too much a move to the downside. Even if there is a move to the downside, there still could be something. I don't know if we'll get back up to the 5 here come earnings. We're kind of in that range, but possibly. Look at this. So where did we touch here? Here, we're down to 30. So that's almost, yeah, we're getting close to a 15, 20 percent move post earnings, at least on the last two. And actually, I'd say the last three right here. Notice we came right back down to 30 for Netflix as well. So on this one, though, if you don't want to own the stock, you've got to be careful to kind of manage this closely. Because, I mean, what we're doing in this case is we're trying to make sure, or doing a better job of helping to define that risk over that range. So that prior high is at 100. What do we have below 100 that fits maybe in that delta range? So here's 100. We got quite a bit that fits down through here. I'm going to do, so let's say a 95. We have a lot of open interest at that 95, and it's oh my gosh, look at that contract. So a penny wide on the 95, penny wide. So there's 95. Are you okay with that holding post earnings? That's the key question you've got to ask yourself on any trade. I mean, this is obviously a paper money trade, but some might be looking at the 90 as opposed to the 95 in terms of selling that one. If we did the 95, which is a 22 delta, keep in mind earnings. I'm going to go a 2 wide over here, 93. So a 43-cent credit. Let's just do a couple of these. Is this max loss okay? Are you okay with that? 314 for those two contracts to try to capture 86. Post earnings, though, we could actually capture a lot quickly if price doesn't move a lot because, yeah, that implied volatility is dropping and that vega could really impact the premium. So that's one consideration there to look at. If not, you can adjust that lower, but that's where we're at on this one here. I'll go ahead and just send this through for now. Actually, you know what? I want to make sure we're putting this in on this one too. Well, there's going to be a lot of volatility here. Are you okay with it moving above a times 2 ratio on here, risking more or than the 0.43 post earnings because it could be quite volatile? That's the question. You'd be looking at 86 cents basically to close that out at. Don't know if we'll hit that. Sometimes there can be a spike around earnings and it can take you out early. Sometimes, you want to give it a little bit more wiggle room so that it can be profitable. That kind of depends. I'll go ahead and set a stop up. I just wanted to highlight that because, yeah, there can be some additional volatility post earnings. Let's go ahead and just set it up though. Create opposite order. Retail cancel. We'll put that as a stop. Set this up exactly at 86 with a double contract here. Okay. That is what we're looking at here. Again, that 314 max loss. There's no guarantee that the stop will hit us out, get us before, but if it does trade through that level, maybe it can hit that stop and then put that order out there to compete with other existing market orders. There you go. Okay, and just to highlight, I'm just going to show you guys a couple that you could look at as well that maybe have been moving. Here's ANET. This one too on a breakout. Look over here with me. Right up towards its higher range on the breakout. So again, maybe selling down through this range or even lower because implied volatility is high. And just for the heck of it, if we just looked at, let's say, for example, look at this, all the way to the bottom here. 110, even below the bottom. What does the 110 look like? Here's your 110 right there. Okay, it's starting to drop off there pretty heavily, but that's like a 6 delta, 0.06 delta. Last one I wanted to look at too, just some other ones that are kind of showing some strength in terms of the trend with a possible breakout. GRMN, folks. There you go. Now that one's maybe able to break above these highs here, clearing the 250 recently. Implied volatility kind of towards its upper range as well. What has it done around that upper range? Well, historically, here, 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 the last three, it's tended to sell off a little bit. And when it sells off, it goes down to the lower end. So again, that 15, maybe 20 uh, level decrease, you could say, in that number. All right, everybody. Well, hey, give us a follow on X, Barb Armstrong CS, Mike Fairborn CS. It was great to be with you today. We did get a survey. Gosh, we did. It's right there in the chat. Thank you, Barb, for posting that. There's a survey link in the chat, folks. There's only a couple of questions. If you get a chance to fill that out, that'd be great. That's a good topic request too. Generally, yeah, if you liked it or didn't like it, it's listed in there 10 to 1. But yeah, I'll take a look at those for sure. And I can pass additional information on to Cam, but he will be the guy, teaching this class, just filling in for him today. All right, everybody. Have a great rest of the day. It's been good being with you. Thank you so much, Barb, for your help in the chat. See y'all.